How is it that many a times when you mark a particular zone, it seems as though that zone failed? Hello, this is Kome. In today's video, I want to teach you about order flow. So pay attention. So the first thing we need to do is I will have to make it very simple. I will have to make it as simple as possible so that you'll be able to grasp what this is all about. So the first thing we're going to do is this. So we're going to name this a diagram A. Okay, so we're going to name this diagram A while we have this as diagram B. Okay, so these are two different scenarios which I'm going to explain in full details as we move on. So the first thing that we must pay attention to when it comes to order flow trading is we must first of all identify the break of structure zone. Okay, so price started coming from this high, meaning price is now bearish, right? So what do we have? We have a break of structure right here. We have this as a break of structure. Okay, so after the break of structure, the next thing we should look out for is inducement. We should look out for inducement. How do we see our inducement? How do we look for inducement? The inducement is the last swing point before the break of structure. So in this case, this zone here becomes our inducement. So because our inducement have been taken, what we do is this. Once inducement is taken, we have to look for structure shifts on the lower time. So we can use various time frame combination with this. You can use 5 minutes to 1 minute, 15 minutes to 1 minute, 4 hours to 15 minutes, or 1 hour to 5 minutes. Okay, so in this video we are going to be doing 5 minutes to 1 minute, but make sure you have a mechanism of identifying the current trend. Okay, for instance, I have the KDRC which I use to identify my trend direction. So today example, after the inducement have been taken, for example, this right here, this is what we are seeing here. So let's say probably there was no structure break right here. Okay, so if there was a structure break, for example, we see that price started moving like this, took out our inducement and started coming down. All right, so in this case we want to see a break of structure here and a takeout of inducement and mitigation of either our order flow or order block. Don't worry, I'm going to share with you what this is all about as we move on. So in this particular scenario, the first thing that, like I said, that we must pay attention to is the trend direction. So now that we've seen a break of structure to the downside and we have our inducement taken, the next thing we want to identify is going to be our order flow. So how do we see that? So there are many ways we can actually look out for our order flow. So let's pardon this my drawing. Okay, so first, an order flow has to be a valid pull, right? A valid pullback, a valid retracement. So in this case, this becomes our order flow. Why? Because price first took out our inducement, right? So this becomes our order flow, the last swing point. So this whole zone becomes our order flow. Okay, so what now happen if this zone had been mitigated? So let's assume that as price kept coming down here, or immediately this formed, we now saw a mitigation here before this low was formed and before this break of structure. So in this case, this order flow have been mitigated by this. So in this particular case, we now look for order block instead of the order flow. So we look at the order block, look for the order block inside the order flow. So if we have an unmitigated order flow and unmitigated order block, what we can do is we can draw the unmitigated order block internally, and of course we must pay attention to the unmitigated order flow, because most times price can just come and react from the unmitigated order flow and continue to the downside. This is one of the reasons why it seems as though constantly miss your entries even after you have set your limit order, because you don't understand this effectively. So this is one of the things I'm sharing with you today, and also how you can potentially look for trade entries and enter the chart. So in this case, immediately this happened right here. So for example, let's say immediately inducement was taken and there was no confirmation on lower time frame to take the short. So what we do is we simply wait for price to break this high. So this high becomes what? a break of structure to the upside. So of course this is going to be a counter trend trading into our actual point of interest. So this case, what we'll do is after the break, we are still going to wait for inducement and this low, and immediately we should also look for our order flow or order block and trade into the major high. I hope you are not getting confused. In case you don't get it, just rewind the video a little bit and watch it over and over again until you get it. Then go to your chart, look for these same patterns, and you are going to see exactly how it works. Okay, so immediately this has been formed. Remember, this low was the low that was responsible for what? For this push high, not this one, not this one. Okay, this was the source of the push. So automatically we are anticipating that, okay, if price comes, let's see this as our break of structure. So that's exactly what happened. Price came, broke market structure. Now, the another thing you must pay attention to: first, we have the minor inducement, all right, and the major inducement. So in this case, of course, this is not a minor inducement. This is actually a major inducement. Okay, so what exactly does minor inducement look like? This is how minor inducement look like. So let's say immediately this happened, we now have another structure internally right here. Okay, so in this case, this becomes our minor inducement, and this becomes our major inducement. And minor inducement, we don't necessarily use it to look for entries, because most times it's going to fail over 70 to 80% of the time. So why risk it? Is not worth risking. Okay, so in this case, what are we looking out for? We're looking out for this zone. This zone becomes what? This zone becomes our inducement. All right, so though this zone is an inducement, and what happened? Price came, broke structure, created another high, broke structure again. So automatically this inducement is now shifted from here into the zone. So we now have a shift of inducement from the major. So the major inducement have been shifted from there to this zone. So what we can do in this case is this: our unmitigated order block becomes this zone. Why? Because we have our unmitigated order block becomes this zone. Why is that? Because we have a valid inducement right here. So in this case, we should be expecting a sell to the downside. Okay, so what happens if this fails? I'm going to show you in the next diagram. So on this particular diagram, let's pay attention real quick. So same thing, we have a break of structure and we have our inducement, and this failed. So immediately this failed, what are we looking out for? You can look for possible buying opportunities on lower time frame into the actual point of interest. So if there are no point of interest here, you don't have to worry. Don't force the trade. Simply wait for what? A break of market structure. So we now have the break here. So of course we can say this is a break of market structure. So in this case, this was a single break. All right, so in this case there was no inducement. Okay, and which means that this ought to be our order flow, of course. Why? Because this was the first point of retracement before price pushed to the downside, right? So automatically this is unmitigated. All right, now this is unmitigated. Why price kept going to the upside? For example, this one was mitigated. Can you see that right there? So there was a mitigation, break of structure, mitigation of the order flow. Price broke, came down, broke this structure to the downside, which we could call a change of character. And look at this. This was a flat single movement. So there was no inducement here. So automatically we have to wait patiently for our inducement to be taken. So in this case, there was no inducement at all. So what do we do? The first thing is this: of course, we need to, once there is a break of structure, identify your order flow. Okay, identify your order flow. If there are no order flow, then identify your order. So what about this zone? If this is another zone, of course not. This is not a valid zone. Why? Because it did not actually break any structure. I hope you are getting it. In case you are not, make sure you are liking the video. Okay, so let's go to the chart and I'm going to show you some live examples. So these examples here are quite interesting. The first thing that we must pay attention to is this: Okay, this is our trading day, and we have what? We have our break of structure. So of course we have our break of structure, and most of you will hurriedly pick this zone as okay, this is our inducement. No, this is not a valid inducement. Why is that? If you see this candle, look at this candle, look at this candle, every price action inside this candle, look at it, it is not, it's just a single move, right? So we consider all of these as single candle, so therefore that becomes a single move, which means we now have something like this, right? We have something like this, of course, to the downside like this. You get it? So something like this, and this is exactly what we have. Okay, so because of that, we simply have to wait patiently. So in all of this, we are not interested, we are not engaged. Even after this high is taken, we are not engaged. Why? Because we see this as a single move. So something like this is happening. So don't expect to take a sell like this. All right, except of course when there is now a break of structure just like this. However, even though there was a break of structure just like this, let's check very, very well. Is there still a valid order flow? Remember, where's our order flow? This is the starting point of the buys to the upside. So let's mark that on and look at that, and let's stretch that. So let's stretch that forward. As you can see, it has been mitigated by this candle. All right, so this order flow is not valid, it has been mitigated, so we are not looking for entry opportunities right there. So automatically this zone becomes what? Our inducement. Of course, this becomes our inducement. We should be looking for selling opportunity from this particular point. So let me give you a simple example of how this could look like on the lower time frame. So what you do in this case is this. Of course, we ought to target this low, right? If we decide to take this trade. So as you can see, probably there is a 1 minute. Let's go to our lower time frame. So 5 minutes and 1 minute can go together. So what are we going to check? We're going to confirm if we were able to find a lower time structure. Of course, we can see it right there. Right here is quite clear. So we have this price push to the upside like this way, and of course we had our break here, which we could potentially call a change of character. And the next thing we need to ask, do we have our inducement? Of course, we have something that looks like an inducement, which is here. Look at that, broke this candle low, pushed out, closed above this candle. Can you see it real quick? So let me do that again for you so you can understand better. All right, so we have what we had it this way. We see the push like this, or like this, okay, like this, more like this, and this is our inducement. So remember, this is 1 minute time frame, and this is the first point. Remember, we'll also have what? Another zone that is above, which have not been mitigated yet. All right, which is what? Our unmitigated order flow. That's very, very important. So what we do in this case is this. Where is our order flow on the 1 minute? All right, on this particular scenario. Okay, this is it on this zone. Okay, as you can see, there was no order flow right here. Look at that, there was no order flow. Let me show you so that you can see it live on the chart. So we have a break of structure here on the 1 minute, which confirmed that okay, we are actually willing to sell. So the question is, where is our order flow? In this case, this whole zone ought to be our order flow. But if you look vividly, there was no inducement before the order flow mitigation. So the order flow have been mitigated, price pushed down, even failed to take out this low. So because of that, we are not looking for entry. We are not entering now, all right, because there's no basis for entry. So even after this break of structure, of course, after this break of structure, we can start considering looking for entry opportunities. And in order for us to do that, we have to also identify what? A new inducement. So we'll go back to the 5 minute. Now this is what you do. Immediately this zone fails. Immediately it fails to hold. All we can do is we can start looking for buying opportunity. Now look at this. But of course this is a counter trend trade. So we have push. We have the break of structure right there. Right? Let me show you again. Probably you didn't see that. So we have a break of structure right here, counter trend trade. Why are we looking for counter trend? because after the inducement was taken, there was no actual confirmation for the sell. So because of that, since there's no confirmation for the sell, which means price is not willing to continue to the downside, then we start looking for what? The buying opportunity. So that's exactly what we are looking at here. So we look for, this becomes what? This becomes our break of market structure. So we have this as our break of structure. And where is our inducement, order flow? So our order flow, this whole zone becomes our order flow. Why is that? This was the last selling candle, last selling move instead, or retracement before the push. And as you can see, price came to the future and reacted from that. Now, why did we mark this, and why did we not mark, where is it now? Why did we mark this one, and why did we not mark, where is it? Okay, why did we not take this trade? So why is it that we are taking this one and not this one? The reason, I've said it already, it's simply because there was no inducement before the mitigation of the actual order flow, unless we are looking at the order block. So in this case, like I said, inside the order flow we have the order block. So in this case, this would have been the order block we are actually looking at, this one right there. Okay, this one right here. So if we had looked at this, of course, that was a very nice push to the downside. All right, however, I already told us how we can get high probability setups using this, how you can avoid unnecessary losses as well. So in this case, our entry will have to be here, and the stop loss will have to be a little bit below, okay, which is quite interesting. And what are we targeting? We can target this high. So can target this high. I know this one, the stop loss is a little bit big, of course. All right, it's a little bit big. So why price goes to continue to the upside, remember, we can still start looking for what? Buys into what? Into our unmitigated order flow. So where's our unmitigated order flow? We'll have to check 5 minutes to confirm. So this is a 1 minute what? Break of structure, right? The next thing is what? We identify our order flow. But on the identify our order flow, we need to what? Check for our inducement. So our inducement. So is there inducement yet? So we have this, okay? So this is just a equal high, but we don't use equal high for inducement. Okay, this is just equal high. I know on this particular day it worked, it played out, but I'm just showing you the template. Don't use equal highs for your inducement. All right, so let's assume that, assuming this wasn't an equal high, that would have been okay. But saying that it's equal high, we're not interested in it, so we wait patient. And while we waited, what are we seeing exactly? You can see another break of structure right there. So immediately the break of structure, where is our inducement? This becomes what? Our inducement. This one right here, this becomes our inducement. So after the inducement, what are we looking out for? We're looking out for a continuation to the upside. Remember, we are not yet there. Okay, we're not yet there. So what we do is look at this. There is no valid zone. This whole zone is our order flow actually, and as you can see, this order flow was mitigated before the inducement was taken. So automatically, what now happened? The order flow is transferred, or instead the inducement is transferred from there to this particular point. So as a result, we are not looking to take this particular buy, but wait for this candle to be taken, this to be taken, as you can see. So simply put, that this is exactly what we are seeing from here. So we're seeing something like this, okay, like this, all right, and continuation to the upside. That's exactly what we are seeing now. So what do we do? Immediately this was taken. Take note, we have what? Our order flow right here. This is our order flow. And what happened? This order flow have what? Been mitigated. This order flow have been mitigated. However, remember we said that for in each order flow there is what? There is an order block inside. So what we could do is, now that this order flow have been mitigated, can refine that into an unmitigated order block. So in this case, this becomes our unmitigated order block. This one right here. Okay. Of course, you have to consider this week as well. but I'm just drawing it out so that you can pay attention and understand. If you notice, you see that price never closed below it with the body, but only wick through, and this is why we must also consider the whole order flow low. So in this case, this is where we might likely have to look for place our stop loss and target. Of course, target is high first. Very, very important. Right, so that's roughly 1 to 5 risk to reward ratio. Now you might quickly say, okay, why are we now, why did we not use this? Let me show you. You might say, oh, why did we not use this? I've said this already. We have the order flow here, and there was no order block inside this order flow. In this case, you see that this was strictly what? A V shape, right? You can see it, right? This was strictly a V shape. Why this one have something like this, right? More like a flip, okay? More like a flip, and that's exactly what price came to react from. Let's go back to the 5-minute time frame and let's begin to see how we can wrap things up. Now I'm showing you most of all of these different examples so that you can know exactly how to apply this on your day trading. This is very, very important, okay? So that you don't have to be waiting for all day long since you are a day trader, okay? So that if in case you miss one entry, you will not miss the other. So let's assume this, you can also wait patiently, and the same principle, you'll be able to enter this trade. So the same principle, that's what we're going to use to enter this particular trade, okay? So let's say, remember that all of these that we have been doing, all of these were what? Counter trade into where? Into our actual order flow, which is the area we are interested to continue the short buyers, right? So after the break of structure, what are we waiting for? We ought to wait for the inducement. So where is the inducement? This was the one that confirmed the inducement, okay? So we now have what? This as our inducement. What happened? Price comes. So after the inducement is identified, what next should we look for? The order flow. This becomes the order flow, and I've already explained it. The order flow is simply is the retracement or the pullback in an opposite direction, right? And it must be a valid move. So this becomes the order. So if we are to refine this, then we'll go to 1 minute time frame to refine this order flow. We can also refine the order flow and pick an order block inside the order flow. Okay, we are going to do that in subsequent videos. Okay, so immediately this is we have been able to identify this, we're able to pick that up. Okay, for example, one of the things I also like doing is I also like if this close with full body, right, that makes it more solid. However, for break of structure, it must be full body close. Why? For inducement confirmation, it can be weak. All right, so in this case, can actually have an entry here. We could have had an entry here, but this is a little bit big for me, and of course this becomes what? This becomes our target. All right, as you can see, this is too big, so I wouldn't want to do that. So the best I could do is to refine that. And how will I refine it? Inside the order flow, higher time frame order flow, there's going to be a smaller order flow, and probably this would have gone a long way, but all the same, in this case, we'll have to wait. Now, two ways you can enter directly, just like in this case. All right, probably I should just make it very tiny. You can enter directly just like this, or simply go to the lower time frame, which is the 1 minute time frame, before you enter. Okay, so two ways: you can enter in the higher time frame directly, or simply wait for the lower time frame confirmations. Okay, now this is very, very interesting. So after we have been tagged on our order flow, have been tagged, the next thing we want to do is wait patiently break of structure. So I want to ask you now, can we see a break of structure? Where is the break of structure? Can we see the break of structure here? Okay, let's reduce this a little bit. Can we see the break of structure right here? Of course not. There is no break of structure here. Why is there no break of structure? Simply because all of these zones, all of these things that is moving, they are actually moving in the same direction. As you can see, there is no actual break. So the only place we'll see a break of structure have to be probably here. All right, this is actually our break of structure, this one right here. So this one right here becomes our break of market structure. So after the break of structure, remember, we have to what? Look for inducement. But the reason why we might not look for inducement is when we notice that there was a sweep. So once our mitigation sweeps, right, we don't actually need what's it called now, we don't need inducement in this case. So where is our order flow? This is our order. Now, have you seen most times why most times you miss some trades, miss some entries, right? So some of you just pick this, oh, order block, wow, nice risk to reward ratio, this is what I want to catch, right? But without you understanding the dynamism of market structure, so this is very, very important. So in this case, that would be what we where we have to look for the entries. Of course, if you decide to refine, right, you can decide to refine and go aggressive, okay, because of this one. As you can see, let me show you right here and see that we have this more like something like this. Okay, so we have this, right, and see it right there. So probably this and this. Okay, of course, this has to be as a result of mastery. You must have known what you are doing. But for beginner level, just make sure you follow exactly what I'm sure. So it doesn't stop there. Doesn't stop there. Okay, doesn't stop there. The same thing applies. Look at this. This whole zone. There's nothing here actually. All right. So after the break of structure, we are waiting for what? Simply waiting for inducement. Okay, so look at this. This is a single move. The same thing that happened here. Look at that. The same thing that happened here is exactly what is happening right here. Okay, so simply we have to wait. Okay, so probably this one, yes, this is our inducement. Why is that? Let me show you why. We have this as our inducement, but take note, this is a single move. Okay, so this is a single move, so we can say we have something like this. This is exactly what we have. All right, why is that? Everything that formed here formed within this candle range. Okay, so after that, after inducement, what are we looking for? Look for lower time frame what? Confirmation. First, break of structure and what? And inducement on the lower time. If we go to 1 minute, for example, we're going to find exactly that right here. So no need to go to the 1 minute. Let me even show you on the 5 minutes. So of course, on the 1 minute, we have this as a break of structure as well, okay, which is a confirmation. Then we wait for more confirmation, which is our inducement. In this case, it's going to be this. Then inducement. Then of course, we look for our order flow. Now on this 5 minutes, you can see this order flow have been mitigated. There's nothing here actually on 5 minutes. Probably let's go to, we are going to see some, so that I just want to be sure that you understand everything I'm sharing with you in this video, right? This is a gem. Once you understand this, it's actually a game changer. Okay, so where is it now? Okay, I think this is it. Okay, this is it. So after the inducement, all right, we can wait for sales. All right, so let's see if we still have other flows, right? Of course not. These have been mitigated by this, and these have mitigated this. So as you can see, there is no valid order flow. However, there is a valid order block right here. Look at that. We have this, an unmitigated order block. Have not been mitigated yet. So this could be, look at that. See how precise is that? That's so precise, right? So in this case, of course, this will be our entry. And remember, consider this weak. Okay, so consider this, right? Then where is our target? This low comes our target. This low right there. So this is also 1 to 5 risk to reward ratio, right? So this, personally, I like taking 1 to 3, okay, because as you can see, if I take 1 to 3, immediately price comes here, I'm out. So this retracement will not affect my psychology and the rest. So lastly, guys, please subscribe in case you have not, because you want to learn more. Join my free Telegram channel below as well. And in case you really want to learn, or just feel free, check the video description. Okay, so we have this as well. Lastly, let's go to the 5 so that I can show you this last example before we call it a day. So the same thing is happening. We have our break of structure. We have our break of structure right there. That's okay. So we have this as what? A break of structure. Okay, after the break of structure, what are we looking for? Supposed to be our inducement before that flow. As you can see, there's nothing here. So we wait. All of this that is happening, they are internal structure. Nothing is here. Nothing. So we simply wait, and this was broke. So once this is broken, what we need to do is quite simple, right? So we have what? Our break off structure right there. So how do we know? Simple. We have a full body break. So there's actually a transfer of break off structure. All right. So this is transfer from this zone to this zone. So now let's look for our inducement before our order flow. So where is our inducement? Take note. This pushed up broke structure. This becomes our inducement. This one right there. Not this one. This one is not a valid inducement. This one is just to entice you to take the cells. Of course, many people will say, "Oh, this is it. Oh, let me take the cell," and they will take the cells here, and boom, price goes, takes them out, and continue. So let's check very well if this zone have been mitigated. All right. So of course, this is 5 minutes, and this is the order flow, and the order flow have been mitigated. What actually mitigated the order flow? It is this candle. This candle mitigated the order flow. Okay. So in this case, what do? We simply look for a refinement. All right. In this case, what we do is we just have to actually use the order block instead of the order, because once the order flow, the truth is, once the order flow have been mitigated, it has lost its power. Okay, it has lost its power. Most times it's going to fail. So instead of you to engage another flow that fails, just simply wait. Okay, then what we can do is we can look intensely, and we look for an internal order flow or an order block. Okay, so what I'm seeing, all of these weeks have been used, everything you have. But let's go to the 1 minute time, probably able to see it clearer from the 1 minute time. So on the 1 minute time frame, where is it? So this is the last example, guys. This is the 1 minute time frame, a little bit clearer, even though it's a little bit choppy, but I will make it clear for us. All right. So first, let's we're going to use this. So this is the 5 minutes order flow. And does 1 minute have order flow? Well, of course not, because this is a single move. So this is the order flow. If I were to mark order flow for the 1 minute, then this would be the order flow, this one right here. And as you can see, it has been mitigated by what? By this candle. So this candle already mitigated the order flow. So we now have what? Another break or push to the downside. So in this case, what do we do? Seeing that all these zones have been taken, there is no valid zone. Take note of this. This is a little bonus for you. As you can see, we have this candle that took out, that mitigated the order flow. You see, it wicked what? This candle. Okay, so which means that there are lots of orders on this candle. So what we can do is we simply mark the shadow. All right, let's see if it reacts to our entry. All right, of course I didn't check this earlier on when I was marking this, but let's see. I think it does. All right, you can see how precise could that be. All right, that's very precise. As you can see, I did not consider that when I was marking this earlier on. Okay, so as you can see, let's say you take that trade, this would be your, imagine that, but of course I wouldn't try this. This is too childish. Let me not call it childish. Childish is too risky. Okay, so the best you can do, you can just give you some little bit buffer, maybe can even say body of this handle, but for me I would actually prefer the whole zone. Okay, so that would be it. And of course, big partials here. This is 1 to 3 for me. 1 to 3, I'm good with 1 to 3. Then what? Our 5 minute zone. This is our 5 minute zone. This is 1 to 8. Of course not, I don't chase 1 to 8 ratio. 1 to 3 is enough for me. With 1 to 3, you can make a lot of money. For example, yesterday I passed a problem challenge, just 1 to 3 trades. It's quite simple. I do this times over and over again. So I just hope you understand order flow very well. In case you want to learn how I identify my direction using the KDROC stamp, do well to check the video on the description or the video on the end screen. Okay, God bless you.